to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show, episode 124. Today is March 15th, 2024. AJ, how are you doing
Options
today?
expiration day. Yeah, good. Looking at what positions that I've got that are going to be expiring and what I'm rolling out.
I feel like the theme of the week is inflation. The past couple of episodes, we've been talking about the expectations for what the Fed's going to do. We had some employment data last week that we discussed, and it seemed like the inflation was higher this week, and it's weighing on investors. What are your thoughts on everything that we're seeing?
Yeah, we definitely had, for instance, on Tuesday, we had our consumer price index economic news out. It was, there was a lot of focus on it by mainstream media, but when you look at the actual numbers, and I'll bring those numbers up right now, I'll bring my magic marker out as well so I can annotate things. They were up 0.1%. Nothing to really, worry about with respect to Fed policy. In fact, I don't think investors really took on that much. They're already on edge because they don't really trust that we're in for a soft landing. The Fed doesn't have the best track record. The last time they brought us in for a soft landing was in the early 1990s. So that was over 30 years ago. So investors are always waiting for the shoe to drop, even though everything seems to be going just per expectation. It still seems too good to be true. So any sort of hint at bad news, but I don't think that the CPI was that bad. In fact, interestingly enough, retail sales for February were tepid at best. They were a little bit on the slower side. We could pull that up as well. You can see we expected about 0.7% growth. We got 0.6% growth. And last month in January, we revised our numbers down. They were at a 0.8% shrinkage. We actually went back and looked at that and said 1.1% shrinkage. I like to look at these numbers where you factor out vehicles and fuel, because those tend to be seasonal, so seasonal and so unpredictable that they can't really factor them out of the numbers of the reports. And gas is all over the board, although it's been a little bit more stable for the last 52 weeks. Oil has been between $70 and $90 a barrel, mostly at that $80 range where it is today. So gas has been less volatile overall, but still retail sales growth for the most part was either at or below expectations. So on the consumer price index, which is the retail inflation, and on retail sales, you're not really seeing anything unexpected. But one thing that I'm paying attention to, and I'm going to see if it turns into a trend or not, is this week we also got our producers price index, which is a measure of wholesale inflation. And we also got our industrial production numbers just a few minutes ago. And the producers price index was actually on the hotter side, Sip. It actually was heating up a little bit, meaning that there's some burn and churn on the factory side in the supply chain, and industrial production was up, which is, kind of on the unusual side. They were expecting no growth on manufacturing output, and it came in at close to 1% of growth. So I'm wondering what's going on the actual producing side of things right now that's increasing this inflation, increasing these production numbers that we're not seeing yet on the retail side and on the inflation of retail consumer. But I think these are all little tiny pieces of information. I don't think that's enough to make the markets move up or down, right?
Yeah, and a little bit of good news here, a little bad news here. We're at these all-time highs. We've just pulled back a tad this week. I know the trend that we talked about on the S&P was the beginning of the week. The market's pulling back a little bit, and then Friday we're seeing a rally. I mean, if you zoom in, I'm seeing a bit of a trend, although we're not seeing that rally like we've been seeing. And maybe that's okay. Maybe it's going to find a little bit of support there. What are you seeing on the chart side of things?
I mean, when I look at when I switch hats and I put on my technical analysis hat, we've been talking about the fact that every time we get a little bit of distribution, we call that range contraction, that it's not enough to like give the market the upward momentum. In other words, in order to keep this momentum going upward, they have to bring in new investors because the existing investors aren't getting their payback through distribution. Every time we pull back less than expected. You almost have to kind of, in a rally, you have to recharge that rally periodically. Otherwise, the money gets all caught up in investments and can't be recirculated. And so the scoop is yeah, it's getting weak, and I keep drawing these lines of ascending and not equally. It's not a parallel channel, right? It's what we call a converging or consolidating channel. And the hilt is actually today, options expiration day. And I've been waiting for some sort of catalyst, some sort of like tinder thrown into the kindling, into the to get things going as far as a breakout goes. I'm not sure I'm seeing that, but you can see just in the last 8 days of trading that people have been getting kind of antsy. They want some sort of news for continued positivity, or is it time for us to start buckling down and taking some profits? I'm just seeing naturally that profits are taking. I'm getting the beginnings of a reversal here, although we've had a couple of false starts. My new indicator, by the way, the one that's going to be available, I'm hoping to get it up into the free website for people to download in the next 24 hours. My new free indicator has better filters on it, so you can see it's not paying attention to any of these little burps of the 3 and 5 crossing. Rather, it only pays attention to the bigger, the actual crossings. So I'm not sure if this will be another burp or what, but yeah, we're getting to somewhere where there's going to be some distribution. And I guess my question is are we going to have a real range contraction type move that would recalibrate and get people, ready to do some buying in the next couple of months? Or are we going to just have one of these little temporary pullbacks and have to keep drawing in new money, right? Because I worry about when the market solicits new money in, because, you've heard the term dumb money. It usually means people with very little experience. And then that might be nice right now, but in the future, that leads to a lot of, issues when, everyday Joes start losing their nest eggs.
And real quick question to wrap up the summary of where we're heading is, as options traders, right? As
Mhm.
premium sellers, we've been kind of waiting for a pullback, and today being options expiration, is that basically cash into my chips day? Is that why you are in a better mood than maybe other Fridays? Is because you can bring that money home?
Yeah, whenever we have a cycle of options expiring, that means we lose a lot of our obligations, right? Because every time we sell premium, what that means is somebody has bought that premium from us. They've given us a couple of, percentage points of instant dividend is what I call it. They've given us that premium money, but now we have an obligation to perform anywhere between when we sell the premium and the expiration date. Once the expiration date hits, which all of our March options are expiring right now if you're on the monthly cycle, you're free of your obligation, and you can kind of make decisions unhindered, right? It's like they took the ring off your finger, and now you've got all sorts of the field opens up for what you're going to do next. So we're unencumbered with any sort of March options that we've sold, and it gives us some flexibility, SIP, to think about what we're going to do next.
And with that, let's go ahead and pull up your free trading workshop. And a theme that we've been hitting on as the market's been hitting these new highs and waiting for a bit of a pullback is that this is a fantastic opportunity to become an options trader, or a fantastic opportunity to explore this investment vertical. And so AJ's got a wonderful free workshop that runs every day. I've gone ahead and put the link to that in the chat, so head on over there. I know that we could probably continue to chat about the market some more, but we have an interesting guest this week that we're eager to bring on and have a little bit more of an in-depth discussion on topics outside of options trading, but having to do with
Yes.
trading. I've gone ahead and throw the link to the chat or to the webinar in the chat. We're going to take a bit of a break, and then we're going to come back. We're going to talk machine learning, AI. We'll bring our guest on. We'll talk about some very mind-blowing, futuristic trading stuff.
I'm
I know you're
stoked.
going to definitely have more info on that. So sit tight, everyone. We'll be back in a few seconds to chat with our special guest in AI things.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
Yeah, I just realized
I mean, Sip, we have totally been talking all about this AI topic, every week, and this is really cool. You were going to say about the commercial?
well, it was just in the commercial you say that you have 4 strategies, but there's a lot more strategies. It's that
There
one webinar
absolutely
is going to
is.
give you 4 strategies.
There absolutely is. I think one of the things that draws me to options is the fact that through combining options, through picking different expiration dates, different strike prices, you can tune your strategies to what you're seeing. And otherwise, if you're just dealing in equities, indexes, ETFs, even if you're dealing on the commodity side and you're not dealing in the futures world, you're really limited. You can only kind of speculate on what's going to happen. And if you're wrong, you get caught with your pants down. But with options, we can hedge the heck out of ourselves. It's just really what has always drawn me, right?
Awesome. All right. Well, let's deviate a little bit away from our typical options trading. I know it's been a topic driving a lot of stock names. For example, Nvidia has been heavily driven by the concept of AI and
The backbone.
the technology needed to develop the processors to run this data and
I'll
whatnot.
put on my smart glasses.
Yeah, let's get intelligent here. But the big storyline this week, this month, has been Elon Musk suing OpenAI. Right? For those that don't know what OpenAI is, it's basically the entity that owns ChatGPT, which is the leader. I would say, I don't know if you agree, AJ, in the AI. At least on the consumer side, like we
Yeah.
as consumers can go use it very frequently. And I guess Elon Musk was an early adopter and he's now suing them. And I guess, the topic for the day is, why is Elon Musk suing OpenAI? Why does it matter?
I think it's a lot more than what we hear in mainstream media, and our special guest has kind of the insights as well as more of a philosophical discussion. These are things that I really want our viewers to kind of think about wrapping your head around so that you're not just coming from the outside, but you have some inside information.
All right, well, let's go ahead and bring our special guest on. Before we do that, his product, Core Disc, is revolutionizing the commodities exchange, the way that we trade commodities, or the way that we think about free markets. Noah, welcome to the show. Thoughts on what we were just discussing? A little bit of background on. Let's go ahead and just talk about Elon Musk first, and then we can pivot into the things that you're working on. What are your thoughts on everything that's going on with Elon Musk and the OpenAI suit?
Sure. Well, the suit is rather bizarre from my understanding. OpenAI, like many companies, is chartered in Delaware, and Musk is actually suing them in California. It was also originally chartered as effectively a charity, and under Delaware law, that means that it effectively doesn't have shareholders. So while Musk did give them a large heap of money, along with a lot of other people, the ordinary sort of relationship that an investor might have with a company, where they'd have some sort of rights, doesn't exist with a charity. They have other rights, and that's why there's this bizarre headline violating the company's principles is what's being sued over. There's a few different things being alleged in the suit. Some of them are fairly crazy, but one of them that is relevant, particularly for startups and investors, is that OpenAI has effectively transitioned itself from being a charity to a startup.
Hmm.
Um, the the OpenAI created, it's still a nonprofit, but it's created a subsidiary that is allowed to create returns for its investors, although those returns are capped at 100 to 1. Um,
Hmm.
so, in the event that they produce 1,000 to 1 returns, say, the investors would not be able to realize that, extra 900, you know, fold gains beyond their limited 100-fold returns, which cry me a river, I guess. But
So is Elon Musk just like mad that they're profiting, or they're turning this concept of AI into a for-profit entity?
Yeah.
well, so it's difficult to wrap your head around some of these things because we only have access to their public statements. So I don't know what's actually in these people's heads. Uh, Musk has talked at length about having issues with the alignment of the corporation, and the
Hmm.
risks of these technologies are heavily underappreciated and are not being discussed. Um, I have pointed out on other channels that Sam Altman did, testify before Congress, and his statements are either lies or Altman himself is simply entirely incompetent and has no comprehension of reality. Because if he had literally anything to do at all with the creation of ChatGPT, then he is aware of certain basic facts about computational mathematics that absolutely needed to be brought up in those forums, and which would not reflect particularly kindly on OpenAI or really any of the other generative AI platforms. And Musk actually does reference some of those things, not in this lawsuit, but in conversations that he's had with people about conversations that he's had with those people. There's a memeable line of his that went around where he said that he was talking to one of them about these issues and was accused of being human centric, and then said that, mea culpa, I'm okay with feeling that humans should be advanced in these things. But OpenAI received a in-kind investment of upwards of $10 billion from Microsoft,
Hmm.
uh, and the CEO of Microsoft has stated that effectively Microsoft has the technology in their vaults, so that if OpenAI dries up and blows away, Microsoft will retain ChatGPT. Uh, and there was a pretty serious board shakeup where the board attempted to fire Sam Altman,
Yeah.
and did for like a few days,
Yeah.
and then they got fired instead, and he and some other people came back, and now the board is much more Altman focused. And so probably part of what's going on with this lawsuit is a sort of tug of war between initial investors such as Musk and much larger entities. ChatGPT, bear in mind, they've been at this for much more than a decade. And when they got started on this particular approach to the problem of natural language processing, which is what they're in, their approach wasn't really considered any better or worse than any other approach. And what they were doing was just saying, well, these neural net things are coming up, let's just throw bigger and bigger neural nets at this problem and see what happens. And what they discovered, effectively by accident, is that bigger and bigger neural nets were performing better and better when you solve the various technical problems of getting them trained up properly. And so I read reports about like ChatGPT 2 years and years and years ago that made no splash at all. Um, and was not nearly as, it wouldn't have been impressive. It was sort of relatively impressive, but it wasn't anything that was commercially transformative. But now in the 3, 3, 5, 4 video, these other things that are coming out very rapidly, um, it's a real sea change. And now that there might be a pot of money attached to it, the people are fighting over where that pot of money is going to land.
What's crazy is that it's like big black boxes. None of us know how these things have been generated. And so it's like a few number of people. It just blows my mind, whether it be Bard, Gemini, whatever, Google's version, or now Copilot, Microsoft tapping into the Chat GPT. It's like they were developed I mean, I guess you've been reading papers about ChatGPT and their models, but for the rest of us, they just appeared on the screen 18 months ago. They
Uh, y-
work.
well, I wouldn't go as far as saying that they worked, but yes, they do something. And I think an important thing to understand, and the reason why Altman's testimony, for example, exposes him as a fraudster, is that they don't actually understand how they work either.
Oh,
The critical thing about this particular kind of approach is that it's black boxes all the way down. Um, so there are some other major breakthroughs in neural net AI like technology. And I kind of keep going back to chess because it's something that people have a lot more awareness of. The top two chess engines on Earth, one of them is an open source neural net system, and it's about the second best. And the other one is this open source project called Stockfish. And while we as humans cannot play chess even remotely as well as Stockfish can, we programmed it and we understand how it approaches the game. And so while we can't understand the moves that it's making, we do have the capacity to read the entire instructions for how it comes up with those moves. Whereas the other system called Leela has been doing its black box thing of training its own tuning algorithm for win probabilities. And while we understand that about Leela, why it thinks that moving a knight versus a pawn in this situation is generating higher win probabilities is not something that humans, even the humans that designed the system or participated in the continuing evolution of the system, have any awareness of.
wow.
So AJ, I just want to pull up Noah's product, the core disk, and we mentioned that Sam Altman can't explain how his system works, but you probably can give a pretty detailed explanation of what you're doing with core disk and how you're implementing this new type of technology. So
Are
imagine.
there parallels with what we've been talking about, Noah? Sorry,
Oh, no, go ahead.
I'm so uh, involved in this conversation. I know we got to keep going, but what are the parallels? What are the
Well,
comparing and
so
contrasting?
the basic thing that all of these things are really driving towards is what I call, and what is shows up in some of the literature, as super intelligence, the ability to produce ideas or information that a higher level that any individual human brain can. So in certain games like chess, poker, and Go and checkers, we actually have those. We have computer programs that will tell us more about positions in those games than any person can relevantly, produce. Markets are another and much more ancient example of super intelligence, where the marketplace can provide us information about how the economy is organized at a much greater level than any single person could possibly know. Um, where my system operates is coming from an alignment first position. So
Mm,
rather than building out some kind of super intelligent system and then just kind of wondering what it does, what I did was develop a very airtight set of game theoretic incentives that allow entities to participate to create smarter marketplaces. And those entities could be people in the market, or they could be AIs if we develop them to the point where they're capable of participating in the market. And so what I've developed is a set of systems and measurements that effectively allows me to disentangle alpha from other kinds of advantage in the marketplace and specifically integrate alpha together from multiple points of view and specifically reward alpha while at the same time offering no real reward for less relevant forms of market information.
explain alpha.
So alpha is the part of what makes you money in the marketplace that
Mm,
is real information about the actual future that winds up happening.
yeah,
And it's the good stuff, but it's also generally the least focused upon
that's right.
by people in the space because, well, it's very hard to produce. Uh, in fact, it might be impossible to produce in general, um, and uh, and so going after some of these other kinds of market momentum or other types of noise measures can be done much more reliably and consequently is sort of the basis of financial incomes, but sadly means that markets don't really perform as well because people are trying to shovel BS into them, and like everything else, it's garbage in, garbage out.
That's right. That's
Uh,
interesting.
and I just threw the link to your petition into our chat. Can you give us a quick rundown of what you're trying to achieve
So
in petitioning?
I've been pursuing a patent on this technology for about 9 years. The patent office has been breaking its own internal procedures and ordinary behaviors in order to throw up barriers. And so there's an appeal that will be heard July 2025. And in the interim, since I don't really have anything to do except twiddle my thumbs, I figured let's push this thing out there and see how much general interest there could be behind having a better economy. Specifically, the current overheads of the existing marketplaces are around the same size as the growth rate of our economy. So, uh, by adopting this technology, we could actually see economies expanding at twice the rate and doing so pretty much from the bottom up. As production becomes more profitable, people could go start farms with the same kinds of returns that they might expect from starting successful unicorn. Lower ceilings, but returns are what puts food on the table. So um,
Why do you think I'm sure it's just speculation, but why do you think that these barriers are going up in the patent office?
So the current stated reason for why this isn't moving forward is that if this patent were to be granted, I would have complete control of the entire economy. Now, the people who wrote that down have personally communicated to my attorneys and I that that's nonsense. And the thing that makes you know that it's nonsense is that they've also agreed formally that there's no prior art, which means every existing form of economic interaction is completely untouched by this patent. However, because these markets do appear to work algorithmically radically better than existing markets, and in fact target the thing that allows current market incumbents to, the New York Stock Exchange has been one of the most important marketplaces on earth for a couple of centuries. And that's not because of an unbroken chain of the smartest, most, ethical human beings in history operating it. It's because whoever's biggest gets to stick around and keep being big. And my market, because it flips a lot of the basic systems on their heads, would effectively be able to outcompete and take over from the current primary market incumbents on Earth, who are, for all intents and purposes, the most economically important entities that exist. And at the very least, the person, my patent clerk, knows that that's what's at stake. And if whoever's giving him orders is also aware that that's at stake, that definitely could provide a motive for slowing the whole thing down.
Yeah, it's like the same reason why all those people in Reddit, ran into issues when they started to beat the big players in at their own game with GameStop and stuff like that, capitalizing on the short squeezes. There's people in power, right?
Right. Well, and that actually brings up another interesting point of the market failure in the with the existence of large coordinated information. So markets existed and functioned in an era where the retail players couldn't behave in a coordinated fashion because no coordinating global network of peer-to-peer communication could even
Existed.
conceivably exist.
That's
Uh,
right.
but of course, we've had one of those since the 70s. And so the same way that collusive behavior by market insiders isn't terribly good for the marketplace and has, blown up in various bad scandals throughout the centuries, a completely novel form of external collusion is now available. And bear in mind that things like ChatGPT, Bard, Gemini, and so on provide yet another mechanism for incredibly wide scale personalized potential coordination, which means that another entire layer of potential risks of that kind of behavior is hypothetically, or it might actually be happening, but it's
Right
certainly not
now.
public. Yeah, right now.
All right. Well, Noah, we appreciate what you're doing. It sounds like if you pull it off, the world will be a better place. So we're rooting for you.
Guys, go take care of Noah's petition. Go put your name on that list. Let's get it's getting more and more difficult for us to ride on the coattails of these big investors. Wouldn't it be better if you could actually just trade on what you see, instead of trying to speculate on what they're thinking? You know what I'm saying? So go give Noah some love there out of his petition. Plus, you've got a podcast, don't you?
I do. Speaking of Reddit, the former CTO is actually my co-host, and we talk about AI and some of these deeper issues, occasionally with guests and occasionally with each other. It's called The Fourth Age: The AI Revolution, and it's up on Spotify, Apple, YouTube, all the platforms we could find.
The Fourth
Awesome.
Age. I know I'll be checking that out.
We'll get the link to that posted. Noah, we appreciate your time. We appreciate you stopping by, giving us a little bit of insight. Hopefully, our trading investing viewers can take a little bit away from it. But we're gonna get back to trying to profit off these markets because that's what we do.
That's what we do on a day-to-day basis. Noah, thank you so much. That was really, really a good, enlightening talk for me. I enjoyed it, and I definitely think that our viewers at least had their mind opened for a split second there.
Thank you. This was a lot of fun.
Cool.
All right, take
Take
care,
care.
Noah. AI. Do we have any AI names today? I know we were trying to potentially look at one.
I don't know if we do. We've got we definitely have some crypto stuff going on.
All right. Well, our special guest, thanks to Noah for stopping by. The links.
That was awesome. That was way off of our usual topics, but man, I
Well,
always
I had a lot
dig
more
on
questions, but I was like, man, we got to get through helping our viewers put on some positions for
profits.
the week.
Yep.
Yeah.
Yep.
So let's get into it because we might be a little bit short on time. So your pick of the week this week, the name that you're looking at, that you're looking for an opportunity, is Marathon Digital, ticker symbol MARA. What's the play?
So the scoop is we did have this on this show. I'm not sure how many weeks ago, but we did have this on our show. But one of our folks, you guys know that I have our trading trainer premium selling program that people sign up for, and they spend at least 6 months with us learning how to do this stuff. And every Thursday we have a workshop where all the participants show up live and they throw candidates at us, experienced traders, and we give our 2 cents on them. And then we pick one of those candidates that were brought up every Thursday, and we go through and yesterday we actually went over. Imagine that. Usually our sessions or our workshops are about an hour in length. Yesterday it went for an hour and 45 minutes because we took the winning candidate, the one that we got thrown at us, and we actually planned out a trade on it. We back tested it, we forward tested it, and we really, screened and brought this candidate through the ringer. And, I don't usually share those candidates, but this candidate was, again, it was one that we brought up a few weeks ago, but one of our users, one of our program participants, contributed it and contributed their thoughts on it. And it was such a winner during yesterday's workshop that I just had to pass it on to you guys. This guy passed all of our tests, passed all of our planning. We're using a fast MACD for our signals. That would be an end of day signal. We're calculating our fast MACD on volume weighted average price instead of close price, so VWAP. If you've downloaded my free indicator, that's easy enough to do. As you can see right here, you just go ahead and select which price you want your MACD to be calculated on. So I'm saying calculated on VWAP instead of on close. It's the fast MACD, so that's the 619.3. I'm going to go ahead and get back out of that screen. And so you can see we've got these signals, and then we just look for trading day follow through, which I've talked about before, and everything's been planning out. So you can see here we're coming down and we're expecting some sort of reversal signal here around the $16 mark. This would be a perfect time for you to get into this trade. We're talking about buying the stock, buying it in lots of 100, because if you want to sell option premium, everything has to be in increments of 100. It's at a pretty good price. There's a ton of open interest, and a ton of the bid-ask spreads are very small on each of the option chain candidates. So we're looking for that signal, and I'm going to emphasize we're not going to trade until we get that signal. And if we get that signal, we're also going to make sure it hits our price target. So there's a lot of things you have to check off. But if you do get all of your planets aligned, we're talking about buying stock or possibly buying a substitute call option. We'd want to go far out in time, deep in the money, finding something that has just a little bit of extrinsic value, but mostly in the money value or intrinsic value. And then, looking for the next high. It's got a very large spread, which is really nice. I mean, when we did the forward testing SIP, we were seeing like returns every cycle of 15-20%, which is actually quite fantastic, making 15 to 20% every month and having it be, building instead of just 15 to 20%. It's parabolic in its gains. The only warning I have is Mara Digital is based on cryptos. It's a kind of a speculative play. And so you want to keep that in mind. Perhaps not going to the max investment that you can do based on your, amount of loss, your risk appetite, but maybe dialing it back, realizing that this is a speculative high volatility and high implied volatility play. But otherwise, this is like right in our alley.
And the link to AJ's indicator is in the chat. But for any of the newbies, new traders, if I were to simplify what I'm looking for next, it would be a blue arrow near that red line to kind of decide that we found some support because we've got the indicator that's giving us a little bit of validity there.
And we look for that blue in the evenings after the market's closed. That's what I mean when I say end of day. We're looking in the evening. So anytime in the evening, right? I do it after my toddler's gone to sleep. So it's usually about 10 p.m. at night. I look through and I look for that blue arrow. And if you get one of those blue arrows, then that's when the next trading day you look for your follow through. And if you don't get your follow through, then you don't do anything. If you do get your follow through, then you open up a position, right? And you can actually, if you get a little bit of elegant, this is what we talk about in our program a lot, you can program your trading platform to do that part for you so that your piece is only in the evenings.
Yeah, that spread is a lot wider than
Usual.
I'm used to seeing on these exams. I mean, that's like
This thing is paying us
$15 and
back big time. I could show you, we don't have time, but I could show you the forward test. I mean, it is like right out of a textbook, Sip.
well, AJ's pick of the week, Marathon Digital, ticker symbol MARA. Once again, we are live, so if you have a name, throw it in the chat and we'll look to analyze it. Not sure we'll have enough time today, but it's open for the viewers to throw some names in there. Moving on to our speed round. All week, like AJ mentioned, he's got some traders, some investors throwing some tickers at him, and we've gone ahead and pulled a few to run through on the show. And we'll get started on the West Coast, or not coast, but maybe Lake Tahoe, California. This is Nancy, interested in B. Riley Financial, ticker symbol RILY.
I'm going to back us up a little bit, Nancy, to a 6-month chart. Okay, I can see why this is interesting to you. It's trading in between about 15 and 25 bucks. I like it. I'm not sure that the fast MACD is my signal. I might want to go back and back test some different types of reversal signals, just because it looks like the fast MACD might be a little bit delayed. But yeah, this guy is coming down. It looks like he's in the center of the channel. So this would be a perfect time for you to be sitting down and planning out your next moves, because when the underlying symbol is in the center of the channel, that if we use those numbers, like those prices, like if you were to go end of day today, or you take the end of day prices from yesterday and plot out your risk, this is the worst case scenario. Doing some sort of premium trade when the underlying symbol is in the center of the channel, that's the max risk that you're going to, entertain. And so if you calculate what that worst case scenario is, and then plan to leg into the position at better prices in the sideways channel, that is a recipe for always coming out on top. So I always plan for the worst and then get always better. It's much better than some of the traders I've seen who go out there and they plan for the best and they're always disappointed. I'm the opposite. I'm always pleasantly surprised because I always plan for the worst. And so coming back to this Riley, I'd go ahead and plan out my trade either using yesterday's closing prices or today's, and come up with some price targets. And it'll also allow you to do some position sizing. Base your position sizing on this worst case scenario. Then when we hit our bottom, and one thing I'd pay attention to is if I get my bottom reversal signal at $15 or higher. If I do, then I'd be open to either, paper trading or real money trading a long position. I'd buy some of this stock in lots of 100, or I'd buy some substitute calls. I haven't even checked out the option chain to see. The option chain does look healthy. If I go out to some substitute options, maybe I can get by with this $5 call, a little bit of a discount, a little bit of leverage. Otherwise, I'd just buy, 100 shares or lots of 100 increments of 100 of the stock, and then go, look for my opportunity for selling premium in the next month or so. If it goes below $15, Nancy, I can see ever so slightly a descending trend here, and it's ever so slight. But a lot of times, if there is any sort of descending trend, as you can see, I just put a best fit trend line in there, and you can see it's ever so slightly. So if I do hit below 15, it might behoove me to wait until my next top. And instead of buying long into this stock, I would short this stock and then sell put premium, because then not only am I making my income trades, I'm also setting myself up for the long-term bulk payment of having my short position work for me instead of against me. So that's just another thought. I like this trade. I
Yeah.
hope you have some success. Let us know as things pan out on this one.
Fits that nice little sweet price point that we look for in between the under 20 stocks prices. Thank you for that, Nancy. All right, moving on to your neck of the woods, AJ. This is Lamont in Richmond, Virginia.
Mhm.
Interested in PayPal, ticker symbol PYPL. That's an expensive one, I think.
It's up
Yeah.
there. It's
All right.
$60. All right, and I could see Richmond is a big banking city these days, since for the most part tobacco has dried up in the South. So Richmond has reinvented itself as a banking. So I could see why you might be interested in PayPal. Um, yeah, okay. So PayPal's in between about 58, maybe up to $64. It's coming up on $64. Let me actually go a little bit further back. I'd love to see what PayPal looks like a year. Yeah, okay. So I guess you're thinking about doing some shorting against PayPal. I don't think that's a bad idea. I would wait until I get my top reversal signal, and make sure it has the trading day follow through. Don't trade unless you get your trading day follow through. I could actually see perhaps using the fast MACD as my signal. So, like Sip said, breaking it down to actual tactics, every evening I'm going to be looking for that magenta arrow. And when I get that magenta arrow, then that's what's going to signal me for the next day to look for follow through. So I'd look for that magenta arrow. And if I get that follow through, there's a couple of things I could do. And that's why options are so awesome. Number one, I can short the symbol. I'll need a margin account to do that. I'll want to do it in lots of 100, in increments of 100. Option number two, I could buy some put options. So that would incorporate some leverage as well as get me that short acting position, but I can use a cash trade. So some put options, and I'd want to go deep in the money and far out in time. I'm talking about possibly using the leaps in 2025 and going pretty deep in the money. The idea is to get it to be trading at parity so that it works dollar for dollar with the underlying stock, only inverse. So when the stock goes down $1, the put will go up $1. So that's another option. And then a third option that's right off the top of my head is we could do a vertical spread. So if you do a vertical spread on this, and I'm thinking about either a bear put vertical debit spread or a bear call vertical credit spread, but one of these bear vertical spreads, the key with vertical spreads is they're so cheap that a lot of people forget that there's 100% risk in them. They can go from hero to zero quite quickly. So you only want to buy as many vertical spreads as you can afford to lose. Don't go overboard because they're so inexpensive. Definitely, like if you have a $10,000 portfolio and your risk appetite is 2%, right? That 2% is about $200. Then don't buy any more than $200 of this vertical spread, because if that vertical spread were to go against you, it goes from hero to zero quite quickly. So make sure you only buy as many vertical spreads that are in your risk appetite. Don't go overboard because they're so cheap and they look like such a bargain. So that's my that's my thoughts on PayPal, but I like what you're looking at.
All right, Lamont, PayPal, Richmond, Virginia, AJ's neck of the woods. Once again, if you're interested in grabbing AJ's indicator, the link to that is in the banner. We've gone ahead and thrown it in the chat. It's free. We go over it. We use it throughout every episode of the show, and AJ's making some pretty cool enhancements week over
Yeah,
week.
definitely go back. Not even if you go today and download it, come back, later in the weekend and check to see if there's an update, because I bet you, and we don't push updates, so you have to come back and check. So, bookmark our web portal, the free access you get to our web portal, program your automatic password remember so that you can log in with one click, and check often, because we don't push anything. You'll have to come and get it from us.
All right, moving on to our third and final name, staying on the East Coast. This is Helen in Newark, New Jersey, interested in bio name Johnson & Johnson, ticker symbol JNJ. That's as boring as it gets, isn't that, AJ? Or do
I
these
mean,
guys fluctuate?
I got no more tears. I had to. That's like the baby champ, right? Let's go back. I think you're right. I think this is boring, sideways moving. Now we're talking expensive, right? And so now I'm thinking, unless you've got a pretty nice portfolio, meaning you've got at least, probably, I would imagine, to do this, you'd have to have 100,000, maybe $250,000 portfolio, in order to do some good premium selling the traditional way. But this is where those vertical spreads could come in again, because vertical spreads are cheap. And what are we thinking here? I think you got a signal last night, right? Helen, you got a signal last night. So are you looking for follow through today? Let's go ahead and switch and see if we're getting follow through today, because this will be a good example for us to kind of explain how we like to look at follow through. So it's the trading day. When I talk about follow through, I don't like to come into the trading day until the afternoon session. So we're still a good 45 minutes to an hour away of when I would actually even come in. But what we would want to make sure of, since this is a down, a magenta arrow that we got our signal on, what we'd want to make sure of is, number one, that we're trading lower than yesterday's confirming day close. We are. The other thing is there's this range that's established in the first half hour of trading. Day traders call that the open range. I want to make sure I'm trading below that as well. So it's the low of the first 30 minutes. I'm looking at 15-minute bars here. So you can see I put a line right at the low. So the lower of those two, sometimes it's yesterday's close, sometimes it's the confirming day close, sometimes it's the open range. Today it's the open range. So I want to be trading, when I come in the afternoon session, I want this underlying symbol to be trading below 157.13. And that would be basic follow through. There's some other things you can look at. My program participants are always talking about the various variations on what you should look for. My key thing is I want it to be something super easy that my automatic trader can evaluate, right? Because I personally go and hang out all day doing other stuff. I don't sit in front of the charts all day. So I like to, in the evening, after my toddler's gone to bed, evaluate where my purple and my cyan, where my magenta and my blue arrows are. If I've got them, I like to program the automatic trader, and then I'm done. I'm not going to be in front of the computer again until the next evening after my toddler, and I'll evaluate whether my automatic trader was successful or not. Right. So if that's the type of trader you are, where you've got the stuff during the day that is going to take up your day, then you and I are, compadres here. But yeah, that's what I'd look for. And in that case, like I said, I'm thinking of some vertical spreads. And again, like I said, for Lamont, definitely don't buy any more vertical spreads. Whatever dollar amount you put in a vertical spread, expect that it could go against you and you could lose it. So make sure you only buy as many vertical spreads as you can afford to lose.
All right. Thank you for that, Helen. As always, if what you're hearing from AJ is, maybe a little bit new to you, head on over to his daily workshop. It is free. He gives a wonderful breakdown of 4 strategies that you can implement into your portfolio. We did go over a couple great names today. Marathon Digital was a fabulous setup, so definitely put that one on your watch list. AJ, options expiration. Fed next week, is Fed info on the horizon anytime soon? What are we looking at to close out Q1 essentially, right? Because that seems to be what I'm hearing is everyone's preparing to close the quarter out, head into Q2 of 2024. Can you believe it?
This year is going by quickly. Hey, the Fed is meeting next week. Investors pretty much think that they're not going to do anything. In fact, if we look at what they're going to be doing on May 1st, investors pretty much think they're not going to do anything. Come June, though, there's still a pretty strong sentiment. Over half the investors think that the Fed's going to drop by a quarter point in June. So that's the date we're looking for. We're just expecting business as usual. If the Fed comes back with any surprise rhetoric or any surprise policy changes, that would be something to pay attention to. But otherwise, it looks like next week's going to be just business as usual.
All right. Well, if anybody new watching has enjoyed the broadcast, we certainly appreciate you tuning in. Feel free to hit that like, hit that follow, hit that subscribe on whatever channel network that you're catching the stream on. We want to give a big thanks to Noah Healy of Core Disc.
Do you see that he put in our private chat a link?
Go ahead.
Yeah, let's put that into the public chat.
Yes, yeah.
He put a link to his podcast. I know I should copy that too, because I'm going to put it in my, I'm going to load it up right now and make sure I am subscribed. That if you like kind of that theoretical thought, guys, on what's happening and some of the minds that are, you know, potentially going to be pulling the switches in the future, you might want to check it out.
And additionally, there's a petition. He's got 150 out of 200. Let's go ahead and help him get to that 200 goal and make these markets more efficient. Other than that, AJ, I think we're ready for the weekend. Did you get a chance to watch Dude like we talked about last week?
Not yet. I'm saving it up for one, dude. I'm saving it up for one of those days where I can like really just wrap my head around it. So I don't want to do it kind of half-assed where I've got the toddler screaming in the background or anything like that. So
it's so good. It's so good. Yeah, you would love it, especially with all this AI futuristic stuff that we talk about.
Yeah.
All right. Well, once again, if you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. If you're looking to enhance your investing game, your investing knowledge, head on over to any of the links that we threw in the chat. The webinar, the free indicator. You'll definitely be invited to some other things once you sign up. AJ, any final words?
Nope, I got nothing. Thanks,
All
everybody.
right.
Give us
Thanks,
that like.
guys. We'll catch you guys next week.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.